Most of us have at least one credit card in our wallets, and most people use them on a regular basis. So today we are going over how credit cards work and a few tips to build a good credit score. For many people, credit cards are a convenience where they can spend money they do not have yet, and others use it to build their credit. But in order to build a good credit, we must understand how credit cards work, how is your credit score calculated, and what factors impact your credit score. There are 5 main factors that impact your credit score. Number 1. Your payment history. This includes your repayments on credits such as credit cards, auto loans, student loans, home equity loans, or mortgage loans. This also includes details on late or missed payments and collection information. They keep track of how late you paid, how often you missed your payment, and how much you owed. This is very important because this provides the largest impact on your credit. This category alone composes 35% of your overall credit score. Number 2. How much you owe from your overall credit available. Something that many people don't know is that a key factor of your credit score is how much of your total credit available you are using. This applies to both types of credit, revolving credit and installment credit. Revolving credit is a type of loan that allows you to borrow, repay, and reuse the credit line up to its available limit, such as credit cards. Installment loans is a type of loan that is paid by the borrower in installments, like a car loan or a student loan. Credit scoring models take into account how much you currently owe against the total amount of credit available. This is also very important since this provides the second largest impact on your credit, making up 30% of your overall score. Number 3. Types of credit used. Your credit score reflects the different types of credit accounts you have. Creditors like to see that you're able to manage multiple different types of credit, and the credit score algorithm reflects this. This composes up to 15% of your overall credit score. Number 4. New credit inquiries. Credit score models take into account how many recent requests for credit you have initiated. These are considered hard inquiries. Now, your credit score is not affected when a creditor uses your credit score to make a pre-approved offer. Neither does it take into account your own request to view your credit history, which is considered to be a soft inquiry. So checking your own credit score does not affect your credit. This category composes 10 to 12% of your overall credit score. Number 5. Length of your credit history. This section of your credit shows how long your credit accounts have been established. The credit score calculation includes both how long your oldest and your most recent accounts have been opened. For example, if you've had a credit card for a long period of time and you open a new one, your overall length of credit history goes down, but eventually will build back. In general, creditors like to see that you can properly handle credit accounts over a prolonged period of time. And this category makes up around 7% of your total credit score. Now that we understand what can impact our credit score, we can look at a few tips to build good credit. Tip number 1. Do not spend more than you can afford. Just because you have a credit limit of $5,000 and only have a minimum payment of $25 doesn't mean it's a good idea to spend it all. Something that is recommended is using your credit card for expenses that you normally already have and have the money to pay them. This will keep you from overspending and keep you from paying those high credit card interests. And if you make your payments on time, you get to keep your payment history in good standing, which is good because this has the biggest impact on your credit. Tip number 2. Keep your credit utilization to a minimum. Credit utilization simply means how much you owe from your total credit available. For example, let's say that Tom and Susie both have credit cards, and both have a $1,000 credit limit on their accounts. Every month, Tom maxes out his credit card and pays it off at the end of the month, and Susie only charges around $100 a month to her account, and, just like Tom, she pays off her credit card every month. Now, based on this alone, who do you think will have the better credit score? If we only consider this factor, Susie will have the better credit score because Susie kept her credit utilization to a minimum. Many experts say that keeping your credit utilization under 30% gives you a good standing status to lenders and helps you boost your credit. And if you keep it under 10%, it will give you the best results. This is very important because credit utilization is the second most important rating on your credit score. is like showing lenders that you are financially responsible, because to lenders, someone who charges all the money they can on their credit cards will have a harder time paying them off than those who charge smaller amounts, making them less of a risk. Tip number 3. You can have multiple but not too many credit lines open. Having a diverse portfolio of credit lines can help boost your credit score, but having too many can also damage it. Consider how responsible you are with credit, because many people get into trouble when they open up multiple lines of credit. Also, take into account that each time you open a new credit line, you will be reducing your average length of credit history, and this can actually lower your credit score. Tip number 4. Do not pay interest. Contrary to popular belief, you do not need to carry over a balance to build credit. Consider paying off your credit card every month to avoid paying interest and keep your payment history in good standing. Now, credit cards, if not used intelligently, can make a big impact on your financial life, so it's always a good idea to learn and understand how credit cards work. If you like this video and want more like it, make sure to give it a thumbs up and subscribe to not miss any of the future videos. And make sure to check out the Betterment Project Wealth Building playlist. As always, thank you for watching, and I will see you in the next video.